Mike, I was going to ask you, what are the three best government down payment assistance programs you think that are out there right now?
I think so. Okay, one, two, three. First one available all the time, right?
Mhm.
There's no restriction. That doesn't run out of money. It's run by Florida Housing, which is a state organization. It's called the Florida Bond Program, and that's a $10,000 what we call a silent second, which is it stays. You borrow the money, it stays attached to the home. It's repayable under certain conditions, but there's no payment, zero interest, right? It's not like accumulating interest. It's $10,000 that you can use towards your down payment and/or closing costs.
Sounds like
So
what I used.
yeah, exactly what you
That
use,
was
John.
the
Sounds like
program
Yeah,
what
you
I
exactly.
used.
And it's
Yeah.
been around and it's been around and it's going to stick around, right? This isn't one that's going away.
Wonderful program.
The second one, which is also through Florida Housing, which is a little bit better than the bond, is called Hometown Heroes. Everybody has heard that, Hometown Heroes. It's a little bit better because instead of being a flat 10,000, it is up to 5% of the loan amount. It's if you're
Mhm.
borrowing $300,000, you can get $15,000 in down payment assistance. Same rules. And then, of course, there's guidelines for which program you qualify for. And then a third one, which doesn't get a lot of traction, but it's really, really good under certain circumstances, is the SHIP program. State Housing Initiative
Partnership.
partnership. And that one's really good because you can get up to, listen to this, folks, up to $100,000 of down payment assistance.
Wow.
Right.
Yeah, that's pretty amazing.
And that one is very
Wow.
limited funds. It runs out very quickly. You kind of have to get your ducks in a row early, and all of them have criteria for qualifying. So you really just need to talk to a professional who knows the rules and knows the guidelines and know which program is going to make the most sense for you. But those are three really good ones, Jim. And
Have you ever seen anybody get 100,000?
I did one. I did one earlier this year. They got 75,000, and that's because you're limited to basically 50% of the loan amount, right? So they were buying a $150,000, not 50% of the loan amount, but 50%. But you get what I'm saying. You can get up to 100, but you can't exceed the loan amount you're borrowing. They're buying a condo that was 150,000, so they got 75,000.
Okay.
But if
Yeah.
they had a 200,000
Then they
purchase,
coulda
they
got 100.
qualified, then they could
Yeah.
have got the full max
Yeah.
of the 100,000.
Yeah.
Wow.
So these programs are very, very powerful.
Is that hard to qualify? Do they make that impossible?
It's not
essentially?
hard to qualify, but you have to be first in line.
You really
right?
got to be prompt.
Yeah.
To get a
So
response to it.
it's you want to go to a concert and get into the floor or the pit,
Get them with the pre-sale.
better get up quick, right?
And I'm sorry if
No,
I'm
no,
interrupting
this is-
you. There's
this is
train
great.
of thought here. The Florida Hometown Heroes is an evergreen program. I've heard you use that word a lot.
Yep.
So the funds as they get repaid go back into the kitty, and then every year it kind of gets replenished.
It gets
right?
new funding.
The new funding.
Yeah, what they did essentially, and the evergreen is written into the law, but the amount isn't written in. What they've done is they did $100 million the first year of that program.
Which was last year or 2 years ago?
I think 3 years ago.
Three
No, it
years
was
already?
2023.
Oh, okay.
This is the second year.
better. Okay,
And
yeah.
it's kind of like a fiscal summer to summer thing. I think it's
Mhm.
July to the end of June. The first year they did 100,000. That ran out by the end of the year, and then they refunded it with another 30 million. So far this year, it's 100,000. The money was gone very
100
quickly.
million.
Yeah, 100 million, 100,000,
Yeah.
100 million. But that 100 million was gone relatively quickly within 2.5 months.
Sure. There was
or
a
2
lot of
months.
people in the hopper, as they say, lined up waiting for that to be replenished.
Yeah,
right?
we
I mean,
talked about it a lot.
yeah.
And so there were a lot that were like, okay, as soon as these funds become available, that's the program. Now, the good thing, if you were working with someone like me, is I could have had you, it's almost like, hey, we're going to do the 10,000, 100%. But if the stars align on the timing and the funding's available,
Yeah.
we can switch to Hometown Heroes if it makes sense.
And
Now-
then when it comes to the ship, that gets, is that an annual
Yeah.
kind
Also
of
funded annually.
okay.
And it's county specific, right? You have like Palm Beach County ship, they'll have Broward County, the various counties, and they get a certain amount of money. And you just essentially, they'll take the first 50 applicants in a year, right?
Okay.
You just have to know when they're opening the door.
Yep.
And you better have all your documentation lined up. And
Uh,
this is like applying for a mortgage, but probably like triple the documentation that we require
All right. So
for
when
whatever.
when they get to your application, if it's not done right, they're gonna just be like,
Yeah.
"Here you go. If you fix that," and they move on to the next one.
It depends on what you're missing, but you just want to have it complete.
Yeah,
And-
and the last one you did, Mike, they tried the couple tried to get into it last year and they just missed out, and then they ended up coming in this year, right?
Yeah, I think they missed one opportunity. They said they were on a waiting game for the next
Yeah,
round.
so they had to wait a whole year, right? But they were prepared for the
I
for
wasn't involved in the first one. The second one,
Oh, you weren't?
I
I
was
thought
involved in
Okay.
the prep work for it
Mhm.
and just making sure they're there. And then it's like, no, you have to be like, when they open the door, you need to, and they do it online. It's like, oh, 6 a.m. on this day, hit the link to get started type
So
of thing.
let me ask you a couple questions about all 3 programs,
And
okay?
they were on the ball, Jim, that success
Mhm.
story. They were on the ball and they were accepting 50, the 50. They came out, they were number 40 something. And they were
Oh,
like
wow.
there at the
Right.
time hitting the
Wow.
button. Right.
Right. Wow,
All right.
okay.
Go ahead.
So let me ask you about this thing. Are there any special qualifications you need for any of these programs? With the Hometown Heroes and the Florida Bond Program, as long as you can qualify for the loan itself, then you pretty much are qualified for the program.
Pretty much. They have a couple slight differences. So there's a credit score. There's a minimum credit score of 640, whereas with other FHA conventional, you can go below 640 and still qualify. So you have a minimum credit score. It's a little bit stricter. There are income limits that you have to think about. And depending on the program, it's either your income or like the income on the application, but sometimes it's also household income. So even if you're applying on your own, but your spouse or your partner, whatever it is not on the loan application, but they're in the house, you have to count their income as well to make sure you're under the household income limit. So there's income limitations and there's some credit restrictions that are a little bit more strict, and also debt to income.
And these all 3 are for first-time home buyers or a homeowner that hasn't owned a home within X amount of years? Is that how that works?
So they call it first time home buyer, but the strict definition is you haven't owned a primary residence in the last 3 years.
3 years for primary residence.
So you
and
could have a rental property that is not homesteaded, you can qualify for this program?
That's right. You
Wow,
could
I didn't even
also
know
like
that.
probably
Huh.
the more common scenario, Jim, is that let's say you're still on title to like a family home or maybe a former marital home, something like that. So a lot of
Mhm.
times people they divorce, but they can't untie themselves from the loan or maybe from the title of the home or whatever. They've got it structured that way. So that's kind of where that primary goes in. So if I've moved out of my marital home 3 years ago, I'm still entitled to it, but I haven't lived there as my primary. So I would be eligible as a
Wow,
first time home buyer.
I didn't even know that. I
Yeah.
learned something here myself, and we use these programs all the time. Another question that I had is when you get the money, right? When the money's given to you to pay for down payment or is it for down payment or is it down payment, closing costs, and prepaids?
Yeah, it's for any of those.
Okay,
Any of the buyer side
costs.
cash requirements.
Okay, so my other question is if you're using one of these programs, can you ask the seller to give you discounts to buy down the interest rate or something like that, or to pay extra money to you at closing to help
You can.
make it affordable? You're allowed to do that
You
still?
you can still do that. The restriction would be that you can't get money back at closing. Let's say you're getting 10,000 down payment assistance. You work it out with the seller that you've got this big credit or whatever it is. You can't get negative 10,000 at closing, right? You can't get it coming back, or even negative 5,000, right?
They're not cutting
They're
your
going to
check.
force it to do what they would call a principal reduction. Instead of giving cash back to you, you just borrow a little bit less, right? You try and structure it so you're not leaving any money on the table, Jim. And it gets tricky, right? When you have seller credits, and usually seller credits are coming because there's some deficiency in the house or
Like
in
a
the
roof,
deal,
it
or
needs to be
just something where it's like,
replaced,
hey,
or
we need some money to fix these things. Can we get a credit from you versus say a price reduction? When you have down payment assistance and you have a nice healthy seller credit, sometimes there's too much money. So
Mhm.
that's where buying down an interest rate is really, a good option because you essentially increase your costs, but it's a good way to use the money and not leave anything on the table.
That's really
Yeah.
good advice for people. And the other thing I was wondering is what kind of loans can you use for these programs?
Your conforming loan option, so conventional, FHA, VA, USDA.
USDA.
Yep.
Okay, great.
We
And
don't have a lot of USDA down here, but
right, there isn't, but Martin County, you can use it.
Yep.
Right.
Here's a question. Why would the lender care about you using one of these programs other than the fact that maybe you're more of a risk if you need it, but you should use this even if you don't need it, right? I mean, we're talking about money.
yeah, I think it's a good question, Johnny. It's why wouldn't, if I'm eligible for this, why would I not
Why would you
ever not
not
do it?
use it? Right.
And I think I agree with you, unless there's some sort of penalty on the interest rates. The one thing about, you know what, you said buying down the interest rate. On these programs, you actually can't buy down the interest
That's
rate.
what I
Yeah,
thought.
I was
Okay.
thinking normal circumstances, how do you maximize seller credits? On these programs, the rates are set essentially by the lender who's behind the scenes on, or the servicer who's on Florida Housing.
Competitively though,
Yeah,
right?
they're very competitive.
Yeah.
That wasn't always the case. Johnny, when you did yours, when you used down payment assistance, there was some sort of penalty associated with, or the rate was never competitive. So in those early days, I didn't like them because maybe your rate could be, go back a few years. Your rate could have been 4%, but if you use DPA, it was 4.5%. Right.
Right.
And
And I
so
had the demo.
I said,
Mhm.
if you don't need it, like, don't take that penalty on the rate. But now with Florida Housing, especially with Hometown Heroes, those rates have been very competitive. I'll give you an example. Right now, I was looking at it. If you use the $10,000 bond program and you're doing FHA, the rate right now is 6%.
Well, that's lower than what
6%,
you're gonna get on the open
which is
market.
lower than what you're going to get on the open market. If you're
What?
conventional, their rate is 7 or 6.75, depending on Fannie or Freddie's program. So you just have to consider that. So I would say in general, all things being equal, why wouldn't you take the cash? The only drawback is you have to think about the repayable nature of the second.
Well, let's get into that. So let's say under the bond program, the Florida bond program, I get 10,000. But let's
Yes.
say that under the Florida Hometown Heroes, I have a $400,000 loan and I'm actually getting 20,000,
20,000.
right?
Yep.
5% of the loan value, $20,000. Do I have to pay that money back, and am I paying interest on that? And is it accruing interest over time?
So there's no interest and there's no payment while you own the home and live in the home as your primary residence, right? So no matter what, it's never accruing interest, right? So it's an interest fee. We call it a silent second. So it stays attached to the home, but you kind of don't think about it. You don't have to make any payments, anything like that. But there are conditions under which that grant or that second is repayable. And the essentially when the first loan is paid off, that's when the second is repayable.
Right.
So what are the conditions that your first loan gets paid off?
Refi.
Refi is probably the number one most
Mhm.
common if you're staying in the home.
That's when I paid mine off.
And that's
Yeah.
when you did. And Johnny and
Mhm.
I were very cognizant of the $10,000 as part of the refinance analysis. And so
Yep.
I'll encourage anybody who's thinking refis, hey, rates are coming down, refi. If you did DPA, talk to me first.
Yep.
Okay. You got to make sure these
Mhm.
numbers make sense.
Got to make sense.
Yep.
Right. And we went and probably 3-4 times. We're like, not yet.
Not
Doesn't
yet.
make sense.
We waited and waited
Yeah.
and waited and waited, and then it made sense, and we pulled the trigger.
Yeah. And so a refinance, number one way that probably that down. Now that doesn't hurt you, right? It doesn't come out. You're not coming out of pocket, right? It's not like you're pulling it out of your bank account. You're just kind of eating into your equity position when you
Yep.
do that.
That's it.
Second way, when you sell the home, right? So it's just, 20K in your scenario, 20K of proceeds that you're not going to get. So just don't forget about it, right? It's there. Some ways that it might hurt you is if you
Well, I think that there might be 2 other ways, Mike. So the first thing would be is if you,
refinance.
refinance.
Yeah.
Number 2, sell the home.
Yeah.
Number 3, move out of the home.
So I was going to say, if you move out
Okay.
of the home but retain it as an investment
Like you keep it
property,
as a second home or a
yeah.
rental.
Once
You're supposed to be telling the bank, "Hey, I don't live here anymore. I gotta give you your 10,000 back."
and I think basically every year they have kind of reaffirmed that you're still living in the home as a primary, and if you're not, they're going to call that note due.
And then there's one other way that you would have to pay the money back if you paid off the loan.
If you paid off the loan, so
Paid
when
off
the
the
loan is
loan.
paid off, and that's you hit the lotto, you're going to
Mhm.
pay off your mortgage, or maybe you're on one of those accelerated payment type of programs.
Well,
Pay it
and,
off.
and again, it's a second mortgage. It's
I
there.
like the idea of calling it the silent second mortgage because if you borrowed 10,000 or you borrowed 20,000, it isn't increasing over time.
No interest.
And then when you're done, even if it's 30 years later when you're paying off the loan, all you're giving them back is the 20 grand that you borrowed originally or
Right.
the 10 grand
Yeah,
you
they're
borrowed
letting
originally.
you hold 10 grand until one day.
And
You're gonna give 10
that move out but retain it is probably when people are considering selling their home, they might think about, hey, do we want to sell and grab our proceeds now? Or do we want to hold on, wait for the long haul, maybe make some rental income? And that's the one that if that note gets called due, it's basically due, right? You're not on some sort of payment to pay it off over time. You owe that money.
And then my last question on the down payment assistance program, and I think there's going to be a different answer for each program,
Okay.
but how hard is it to apply? Is it a pain in the butt where you're going through all this stuff in order to get the money? and
The-
it almost
No,
isn't
Mike has
worth
to
it.
do it. He
Yeah,
gives
yeah,
all the
so-
information to him. He's got
so-
Not all the
No,
time.
I'm
There's
kidding.
one program where he has
You as the buyer or the borrower don't have to do anything extra with the Florida housing, the Florida bond, the hometown heroes. You have to do nothing extra except there's perhaps a homeownership course, a new home buyer online course that you have to complete.
I
That
had
sounds
I had
education.
to. I
Yeah,
had to
you
with
did
my
that.
Florida bond program.
A lot of
Mhm.
people take that course. It sounds, oh, I just got to get through it. But some people actually, they haven't
like
bought a
it.
home before. It's
I like it.
educational.
Yeah,
The
tell me
SHIP
more.
program, you have to do a lot of what I would do in a pre-approval documentation gathering, but it's a lot more than I would ever ask somebody up front
Mhm.
because I'm just, okay, let me verify your income, let me verify your cash position, let me look at your credit. SHIP has a lot of documents that are old school mortgage underwriting, so that can be a pain in the butt. You have to know the date and time and be there and be able to navigate their process. So that one is some extra work.
But
You're getting
a lot of
Yeah.
you're
Yes.
getting a
Yeah.
lot of
I was
money.
gonna say the one that's harder is the one that you get the most for.
Yeah,
Yeah.
well, it makes
Yeah.
sense.
Yeah,
Makes
yeah, yeah.
sense. Now,